Hello and welcome to Fidelity Connects. I'm Pamela Ritchie. Some of the biggest names making noise on Wall Street are founder-led still. Notably, earlier this week, DeepSeek sent equity markets into a bit of a frenzy, highlighting the powerful impacts of companies led by their original visionaries. What are some of the founder-led companies that are making noise in today's marketplace all about? We might dig into that a bit deeper, and which some of the themes that are helping our next guest decide which companies to place investments in. Joining us here today to discuss all of this and more is Fidelity Founders Class Portfolio Manager, Dan Kelley. Hi, Dan. Great to see you again. How are you?
Hi, Pamela. I'm doing great. Thanks for having me.
It's been fascinating to watch your fund. The performance has been off the charts. It's been actually an extraordinary time in the equity markets for where you invest. Are there new founders, a new crop basically coming along here that you're starting to meet and greet?
Pamela, it's a great question. Yes, there are. I think with all platform shifts, which I consider this generative AI platform shift to be, you get a whole new crop of companies that emerge on the back of this new technology. And I'm seeing it in the private markets. I'm meeting with a lot of these founder-led companies, and it's really exciting. That doesn't mean that the current founder-led companies in the fund that are public and also benefiting from some of this technological advancement, they're still in good shape too. But it'll be nice to have others to choose from.
Fascinating. Okay, we'll dig into that a little bit. Tell us a little bit. I mean, the performance we've seen has been extraordinary. It's been a very interesting time in the equity markets. But what you do is niche. It's fascinating, and it's clearly successful. Remind everyone how you go about this within your fund.
Thank you, Pamela. Just by way of background, for those who are not familiar with the Fidelity Founders Class, it's a mandate that's near and dear to my heart. So I've been at Fidelity almost 20 years, and I started my career as an analyst covering many founder-led companies. And what I witnessed over time was that these, particularly in the real estate world, in the technology world, in the healthcare world, these visionaries can create tremendous value because they don't get caught in the short term, quarter to quarter, every day, trying to beat by a few pennies world that we live in on Wall Street. So as that kind of trend emerged, we did some digging. We back tested the data of founder-led companies that were liquid enough to invest in. And we found that there was a significant alpha opportunity if you pick the correct founders. And fortunately, we've been able to demonstrate that the thesis holds water, that this is a fruitful place to invest in over the years.
So some of the faces that we do know of founder-led companies, because many of them are famous, many of them are in the Mag 7, were the faces we saw at the inauguration, for instance, front row seats for lots of them. And it's been a time of AI, the beginning stages of what we think will be literally a complete worldwide revolution. Again, some of these companies and founders, you know well. Tell us a bit about the time it's been for literally the front-facing founders of the sort of American economy at this stage.
Yes, it's a very exciting time. I think it's important as an investor to really catch transformational change. And I think if you think back to 10 years ago, 10 or so years ago, there was really a shift in moving workloads to the cloud. And that benefited a lot of the companies that you're referencing. And it was powerful. And it went on for many years because it lowered the cost to companies. It was a high ROI for the companies providing the cloud infrastructure services. And it lowered the cost to their customers. And that was a powerful transition. I think this transition to generative AI and accelerated compute is going to be even more powerful. And so I think there's a concern, can these winners from the prior crop that have become these mega cap companies, can they kind of maintain their moat as they move to this next transition? I think many of them will actually have a good chance at it, but I think in this wild regulatory world, a world where there's just been a huge transition in the White House administration and the way in which they do business, I think they're very much aware that regulation needs to be their friend in order to make this jump. And hence, that's why they were all at the inauguration. So that was really important.
Well, tell us about the jump a bit, because we've heard, data centers has got to be the most overused phrase on the planet, but it's also powered an enormous trade. Do we sit with the infrastructure story? Where do you look next?
So I think the infrastructure story is vitally important. So we have hundreds of billions now of dollars of capital spending by a lot of these companies to build out this accelerated compute infrastructure. That has been really the only way in the public markets to participate in generative AI to this point. What excites me is we're starting to see the cost curve accelerate to the downside, which is going to open up the consumption apertures for which we are all going to probably start using more generative AI in our everyday lives. And I think that transition is to what I would characterize as an application layer, from generative AI. And that's going to take 5 to 10 years. We don't know some of the applications that will be created that will make our lives easier. Could be a co-pilot, assistant that's helping us every day. It could be driverless cars. There'll be lots of innovation, and that's what founder-led companies is all about. They see a different way to do something, to make our lives better, and they literally bet the ranch, all of their net worth. And so I think this technological platform shift is about to get more exciting because the infrastructure is important. Those players distribute this high performance compute. So if we're consuming a lot more of it, I think they're in a good spot from a toll taking and continued high ROI on an incremental capital spending dollar standpoint. It's good to be a toll taker in a rapidly expanding market. But what excites me for a fund like this is that it's also going to lead to that next generation application layer with many companies that we all have never heard of. I'm meeting with many of these companies that are emerging and meeting with their founders in the private markets and excited that as these companies look like they can scale because that cost curve is coming down, that will be the path to come to the public markets and potentially be much bigger companies.
Interesting. So you're talking to them in the private markets. There's an opportunity for them to go public, and once that happens, or maybe even before it happens, what sort of new knitting of a marketplace is possible?
Well, it's going to be quite interesting. It's literally unfolding at our fingertips. I think right now, going back to your infrastructure question, these scale mega cap companies are literally empowering the development of this marketplace. So they have their kind of fingers in the jar and are almost like puppeteers in terms of kind of seeing where the wind is going. And so they're trying to actually, a lot of them are taking investments in these companies. They're trying to hedge their bets in terms of who's going to have the best large language model. And so I think you're going to see a bit of a hybrid universe emerge at first with these mega cap hyperscalers having a big part in that, given that they're providing that access to high performance compute that all these new companies need. So there has to be a bit of a symbiotic relationship at first, which is not a bad thing. These companies are huge. They have scale. They have lots of consumers that use their products every day. And so I think this hybrid landscape is the most likely way things will start to play out.
Fascinating. The fund itself is very much on the ball of all of this, and that's what you're telling us about. There are other areas that you're investing in with founders that maybe are not tech founders.
Yes, I do like to reinforce that. I think it's always fun and exciting to talk about technology and communication services, but if you take comm services, technology, and even throw in healthcare, that's still about about 50% of the fund. So I'm finding founder-led companies across every sector. So financials, materials, consumer discretionary. Consumer discretionary is really interesting because it covers the gamut from Amazon down to retailers and restaurants and I want companies. This has been a low turnover fund. It's find the right companies that are doing things in a unique way that can scale, that the market is underappreciating in terms of how big it can scale. And oftentimes those companies can become, exponentially bigger. And you want to compound with their growth. So that happens in technology, particularly during exciting times like today, but it happens across the market. And I think the past 6 or 7 years that we've been doing this fund has demonstrated that.
What trends, Dan, are you hearing about in company meetings or sort of questions you're asking? What are they saying, if you can give us a little bit of a taster in some of the meetings? I guess companies that are already public, but maybe if you can give us a little bit of an idea of what's being said for those that are not there yet.
In terms of discussions today, I mean, the past week or so has been all about DeepSeek, which I'm sure has been on everyone's mind, and this Chinese model that was supposedly created at a much lower cost and high efficiency with some of the algorithms that they created. I think that is actually quite exciting to the long-term trajectory of this generative AI landscape. I think there's debate over, did they distill some of the information that they used in their model from other large foundational models? But big picture, this gets to that very cost curve aspect that I was talking about. You're starting to see companies that don't have the resources of some of these large companies that can throw billions and billions of dollars at things, figure out ways to make things efficient and work for them. And as that kind of flows down to the consumer in terms of new business models, consumption, I think we're all going to see generative AI impact our lives a lot quicker. So, and I don't think that necessarily means we don't need as much infrastructure. I think it actually could mean that over the longer term, we might even need more infrastructure than we thought. So, obviously the market's expectations going into this we're in a different place, but I think it's important to step back and look at the big picture, which is still incredibly exciting, if not more exciting.
Really interesting what you mentioned about because again, you sort of go back, it's been such a fast moving story and unfolding, but there was this question mark, I don't know, a year ago, maybe less, of at what point do the old Dusty's wonderful companies actually find this accretive to what they're doing every day? Like at what point does it impact earnings? And no one's really said much about that, and you haven't really seen it yet. I guess, could you speak to how much on the cusp some of the founder-led companies that you follow that are not necessarily tech companies on the implementation side, like how close are they to really making this happen inside their companies?
Yeah, so I would say right now it's quite accretive already. It's just a little more difficult to observe. So where we're seeing the most benefit from the generative AI advancements to date, the high performance compute infrastructure, is really cost efficiencies. So some companies, if you're a software company, you might not need as many software engineers, particularly at the lower end. From a marketing standpoint, you might not need as many marketing people if you can have more efficiency in your marketing department, things of that nature, scaling your G&A. And unfortunately, that's kind of not that exciting to the market, but it's exciting to me because I'm really focused on positive earnings revisions. And then you get back to the hyperscalers, they would argue that they're getting a ROI today, or else they wouldn't be committing these dollars. They're seeing their revenue accelerate in some cases, and obviously they're generating tremendous amounts of free cash flow in their current business models. So if it's enhancing their revenue and they're seeing ROIs today, they would argue that those ROIs could even improve. Cost benefits, accrue to them in future investments. So yeah, I'm seeing it right now, but it's not necessarily revenue generating. You're not seeing new business models yet. So that's what I want to kind of reinforce. And that's what's so exciting to me. I'm trying to find those. I'm turning over a lot of rocks. I'm leveraging Fidelity's scale and resources. Just to put the scale and resources into perspective, Pamela, during this DeepSeek discussion and what was happening in the markets, we were talking to founders, to CEOs. We had access to some of the biggest companies in the world within hours and days. And going back to where it's accretive, there are private companies that are not profitable today. They're growing at a tenfold rate because of how quickly this is growing, but they're not profitable. And then there are companies on the infrastructure side that are incredibly profitable. So it runs the gamut. The market is obviously very focused on growth for the company that's losing money, but that company still has access to capital and is getting financed. So it runs the gamut, losing money and it's accretive to the hyperscalers right now.
You're there in the conversations. It's fascinating. What about the sort of transition in connectivity? Maybe we should put it that way. I don't know, that you see the rise of some of the old telecom companies because there's maybe a new version of connectivity, more satellite. Are there opportunities in there? How do you view some of those? I'm sure those aren't as much founder-led, but then when you go to the satellite side, there is sort of a founder-led element.
Yeah, there's a big founder-led company
Yes,
there.
there is.
It's still private, but in terms of one analog I'll give you, I think kind of what you're alluding to is, I think of traditional media. We all used to have our traditional cable company providing our video service and our broadband, and now there are so many different ways to consume media. Most of those via streaming, and that service and experience was exponentially better in terms of what you were consuming as a product. It was easier, you could do it on the go, and it was at a fraction of the cost because the legacy media companies got kind of, fat on the hog, if you will, in terms of taking a lot of price, thought they had local monopolies. And a founder-led company, Netflix, for example, saw a better way to provide high-quality video content to the consumers. And initially, there was a lot of skepticism. Okay, this company is incredibly expensive. They can't, compete with the wallets of these incumbents. And the consumer spoke with their wallet. They walked away from this high-cost service. I'm going with the more productive, better quality, lower-cost service. And that's really the founder's mentality in a nutshell. And that happened across media. It happened with Spotify on the music side. I think you're going to see instances like that with generative AI. You're going to see traditional markets totally disrupted, and the legacy players will fight it at first and ultimately join it over time once they realize that the TAM is much bigger than they initially realized.
Can you remind us how you manage a founder leaving the company, for instance, when it's actually no longer founder-led?
Yes, so I try to keep guardrails on things of this nature. So in general, I try to see if there's an heir apparent to the fund. So I will invest in family run companies, kind of like Fidelity. I think that oftentimes that founder's mindset can span generations. I will also put it on a 1-year shot clock. So if there isn't an heir apparent or someone that's going to execute on that founder's mentality, I will sell the stock within a year. I don't want to ever be a forced seller, Pamela. I think if you're forced to sell in the marketplace for just the change of the news in a day, you're never going to get good returns for your shareholders. So I do think having a gradual process to assess this, and oftentimes the founder will tee it up in terms of all the infrastructure and vision, and you just need someone to execute on that vision. And usually during the execution phase where a lot of the value is created, and I wouldn't want to sell and miss out on all that value creation if the founder effectively put the company in a good place to execute on the vision. So 1-year shot clock, see if there's an heir apparent, and don't be a forced seller. Take time and see if there's someone that can be passed the baton.
That's brilliant. So yeah, this other one is fitting into exactly what you're saying there. But what triggers you to sell a company maybe outside the founder discussion? And even, I mean, management will always be part of
Oh,
it.
yeah, I think you have to really stay flexible. This business, we're getting new information constantly, and I think where I see the most value destruction is when portfolio managers kind of hang on to their original thesis, even when it's being called into question. So we're getting new information all the time. It's important to analyze it, vet it objectively, see if it challenges the thesis. If it challenges the thesis, I'm quick to sell. I verify. I spend a lot of time, analyzing the new information and leveraging network, talking to other companies. But most of the time, it's better to move on, focus on your best ideas, where your thesis is actually gaining conviction, than when new information flips over and challenges your thesis.
There's a big discussion right now, rightly so, about exits of private companies. You've talked about your interest in those founder-led companies that are private right now. From a market perspective, there's this big discussion of like tons of either M&A or IPOs are going to be sort of coming on to the market. What do you see from your vantage point? You're speaking to these companies. Are they approaching the public markets in kind of a new flooded type way, or?
Yeah, maybe it makes sense just to provide a quick backdrop on how I feel about the capital markets, and then I'll kind of get right to your question. I'm constructive on both the economy and the capital markets. I think there's been a lot of fear. We've been climbing the wall of worry over the past 2 years as the Fed tightened aggressively, and people were concerned about recession. Now we have fear amongst folks about the new administration and what could go wrong there. I think cyclically earnings growth is improving. The market's not cheap, but earnings growth is heading in the right direction. And then this new administration could have positive optionality. Deregulation is a big potential tailwind. And along those lines, credit spreads are really tight. So we've created a ton of asset value over the last 2 years. Asset prices are 40 to 50%. It's really hard to have a down credit cycle when you've just created so much net worth. So all of that backdrop is tremendously positive for the capital markets. So feel good about the alternative asset managers being able to exit some of their legacy private equity companies and ultimately see companies go public, which is great for a new crop of founder-led companies.
Yeah. Okay. Fascinating. That's so interesting. Let's go back just a little bit to some of the ideas on. I mean, it's the idea of apps feel like the old version of what we were talking about, but because you have the iPhone or whatever, and then you sort of waited for the ecosystem of apps to be created, and now we're swimming in them. There's a new analogy that probably has better words for it, but tell us about the applications of AI that we're going to see. I'm thinking robots here. I'm thinking of other things, but tell us what interests you.
Yeah, it's incredibly exciting time. I met with a humanoid robot company just a few months ago in Silicon Valley that are making tremendous strides. Their robots are being employed 24/7, by the way, by some German automakers already. I think humanoid robots could be a really exciting area, again, that benefits from the cost curve. They're not ready yet to be mass produced, but you're going to see some pretty significant advancements. Self-driving cars obviously could be another big application. Co-pilots, I think we all could use a personal assistant helping us every day and freeing us up to do more value creating things that actually reasons and gets to know us better, so that assistant is becoming exponentially more productive over time. And I think those are the things that people aren't really thinking about in terms of how big of a market opportunity generative AI could be, let alone new business models and that sort of thing that could make us all more productive.
And what would you sort of, I guess it'll be interesting to look at. There are discussions about how AI will be another leveler, another way of sort of leveling the playing field for those that maybe haven't been able to access either investments or new ideas or technologies or so on. Tell us a little bit about that. I mean, do you see this moment as transformative in that way?
Yeah, I think it's going to be transformative in that there are going to be haves and have-nots. I think a lot of times we immediately go to the negative story and what could go wrong versus thinking of everything that could go right. At one point, 150 years ago, a lot of us were farmers, and now farming's a relatively small percentage of the population. So I think,
Resurgence there, though, it seems, Dan. There's a
yeah,
resurgence.
a little bit. But no, you'll see some disruption to some fields. But I think that what makes me so excited as a stock picker, trying to add value, is it's our job as analysts to figure out who's going to benefit and who's not, who's using this technology to enhance their business, who's missing out or potentially being left at the table, and that creates incredible amount of alpha and dispersion in terms of stock returns if you can pick the correct winners and losers. And that's what I think Fidelity's so good at. That's what I think our research department is phenomenal at. So I'm looking forward to this time. It's tough to underwrite right now. That's creating wide valuation spreads, and I'm going to try to harness those valuation spreads in terms of opportunity for my shareholders.
Fantastic. Quick note on crypto of interest to you. There actually are some new large name founder-led crypto new coins out there. So tell us what you think.
I'm a believer, Pamela. This fund has some exposure to crypto. I own right now. I tend to prefer the distributors of crypto. I think this new administration has added a increased institutionalization aspect to crypto, and regulation is good if you're an existing provider. So even if they do come up with regulations, that's going to further embed crypto in our everyday lives. Limited supply, increasing demand and institutionalization is good for the underlying price of things like Bitcoin. And it won't be without volatility, but it is a relatively uncorrelated asset to other asset classes. And I think the asset class is only going to get further institutionalized over time.
A final note on what a moment it is for everyone who's at Fidelity often starts as an analyst, and so you're digging deep in from that way. Is this an interesting moment for sort of a fundamental approach? It's always an interesting moment for fundamental approach, but there must be new fundamentals going on.
Yeah, I mean, I'm a fundamental analyst, and I think this is where we can really have an edge, because some of those things I was discussing about, cost savings and new tools to generate more net income and free cash flow, those are going on right now, and it's through smart, unique analysis that really discovers those things and tries to see what that means to future earnings power, and if there are kind of big opportunities, I think we're trying to find them and harness that potential revision opportunity for our shareholders. So it's an exciting time to be a fundamental analyst. We've always been fundamental analysts, Pamela, even though maybe it hasn't felt that way. We are in the weeds on all of these things, which is what makes this job so fun.
We know you are. Dan Kelley, heading up the Founders Fund. A delight to speak with you. Thanks so much. All the best.
Likewise. Thank you, Pamela.
Thanks for listening to the Fidelity Connects podcast. If you haven't done so already, please subscribe to Fidelity Connects on your podcast platform of choice. And if you like what you're hearing, leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. On fidelity.ca, you can also find more information on future live webcasts, and don't forget to follow Fidelity Canada on X. The views and opinions expressed on this podcast are those of the participants and not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy, or an endorsement, recommendation, or sponsorship of any entity or security cited. Read a fund's prospectus before investing. Funds are not guaranteed, their values change frequently, and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks again, and see you next time.